Hi, I'm Ross O'Brien with the Economist Corporate Network in Hong Kong. We've just wrapped up our Regional Operating Cost Outlook 2014 session, where Economist Corporate Network members shared their opinions on where they believe costs in rent, talent, material inputs are going to go into the next year. I'm joined by my panelists, Gavin from Moderate Terminals, Juan from RS Components, and Gavin from Jones Lang LaSalle. Joan, thanks for your time this morning. Gavin, let's start with you. You had presented a fairly cautiously optimistic outlook, I should say, that costs aren't going to increase on the logistics side and into the future. But underlying that is the sense that there's a certain amount of dysfunctionality in the global shipping industry, and that while domestically in China, logistics is getting better, thus more efficient, much of the reason why costs aren't going to go up in global shipping is that the industry is in such disarray.
Well, I think, putting oil aside, there's a lot of oversupply of container capacity in particular, which is keeping costs down from a pricing point of view. The carriers themselves have optimized their internal cost structures and their vessel patterns as much as they can, and now we're seeing a move more into shipping alliances, where recently the three biggest companies, Maersk, CMA, and MSC, all came together on all their east-west routes to consolidate the capacity, particularly the mega vessels over 10,000 TEUs. So that's a way for them to moderate their costs and hopefully pass that on to customers. And what will be interesting to see is whether that commoditizes the market, or whether there's still a level of differentiation that the carriers will be able to provide into the market, which will allow more choice. Given the costs are lower, hopefully they'll stop bleeding cash, so can maybe focus more on customer differentiation and customer service.
And with regards to some of these so-called headline stories that don't necessarily translate into reality, would it be fair to say that you give not much truck to the notion of nearshoring? You don't see shipping costs ever being a reason why manufacturing would relocate from Asia back to the US or Europe?
Obviously, for different products and different market segments, there are different dynamics as far as the percentage of the shipping cost going. I think what we're seeing is that in the same way that low-cost capacity moving to low-cost countries in Asia, or inland in China, or even near-sourcing into, say, to America or fleets in Europe, tend to be sort of very specific product decisions, and tend to be incremental capacity, rather than shutting down in China and moving back lock stock. So it's definitely a real phenomenon, all those three dynamics.
Yes.
If we take apparel went to Bangladesh, very low cost, very good infrastructure there for doing that, but not a lot else went to Bangladesh.
That's right.
So I think we're seeing it's more a niche play rather than a wholesale. China's share of overall global exports keeps increasing, and we think that will continue.
Right. And from a components maker such as yourself, from your perspective, you also see the regional landscape shifting, but more or less most of that production still staying within Asia.
Yeah, that's right. And I think although we're looking at a slightly weakening demand, the sort of the growth outlook for the region is still very important and higher than anywhere else. What we're seeing is probably an increase of the cost, which you can see as a challenge, but also as an opportunity. The times of very low cost might be gone. We're not going to get the cost increases that we're seeing, or the cost levels that we're seeing in other parts of the world, but certainly probably about a higher cost than what we have experienced in the past. That is just telling us that we've got to become more efficient as organizations, and we will stop thinking about probably Asia as a simply low cost area and start thinking about efficiency and productivity investments, which at this point in time, I don't think they're going to be massive and big technification projects, but they're going to be about small steps towards becoming more efficient as organizations. I think overall that's very good, because it reminds us that we have to be looking at that, and it's not all about growth, but it's also about looking inwards and trying to do things better. In that respect, there are many ways that we can think about that in the distribution business, around how we select our roads, how we manage our inventories, and all of those things we will have to be thinking of and working hard in the next coming months to sort of step up a little bit from what it's been in the past.
One area that you mentioned that should bring joy to any enterprise software vendor's heart is you feel that there's an information revolution coming within Asian manufacturing in the region.
Yeah, I think there will be sort of, I would say, low investment technologies such as sort of in the distributions area, we'll be talking about inventory management systems, warehouse management systems, as well as some sort of voice picking technology. Those very sort of low investment but high return type of investment, which can actually help a lot gain productivity without having to expect a very long return on investment.
Right, right. Now, Gavin, with these sort of slightly shifting sands of Asian production and Asia's growing role in the global economy, that all nets out to a reasonably positive view on Hong Kong's continued importance as a regional hub.
Absolutely, and as we discussed earlier, Hong Kong is a place that continues to evolve.
Yeah.
As the region changes, and as we've all, I think, heard people say, it's a place that always finds a way to find its way forward. But certainly the future looks bright for Hong Kong in terms of it continuing to provide a very strong platform for the services sector and to be the premier centre in the region for the services sector. Obviously, it's no problem, or it's an asset to Hong Kong. Its location so close to China, and the fact that it's already providing such a successful platform for the multinational community, and we believe that in addition to that, it will continue playing that role, but will add the China corporates to its portfolio as well in terms of organisations that want to look internationally to do business from China, alongside the MNCs trying to play that role in Asia.
Now, the other side of that sword, of course, is that given all the attractiveness you've described, costs and occupier costs will not be the ease of doing business in Hong Kong will be your ability to pay rents that are going to still be globally high, and you see 2014 still seeing occupier rents ease upwards. Is that right?
We do. Joseph Lassalle believes that will be the case, and as mentioned, Ross, we firmly have the view that Hong Kong will still provide accommodation that will enable corporates who prefer to be in Hong Kong to be in this location.
Right.
That there is not a need to leave Hong Kong at this stage because it's expensive. There are locations in Hong Kong that, from a commercial rent perspective, are broadly competitive with almost anywhere in the region, with infrastructure and amenities that are at least as good and in most cases better than anywhere else. So no threat to Hong Kong's position in that respect, and but likely a strong year for the market over the course of the next year, yes.
And finally, the notion of CBD2, I know you have a very positive long-term view in that, but in the next 12 months, will Economist corporate network members or any regional managers see mass migration towards East Kowloon or non-central hubs within Hong Kong?
I think that it's extremely likely that we will see a continued strong migration from some of the more traditional, longer established commercial districts to Kowloon East, which is CBD2. There is new accommodation either being refurbished or developed in that location. That supply will drive further occupancy. And beyond 2014 as well, a lot of that accommodation will be delivered into that district in 2014, but we still are of the view that by 2020, 2021, that will in fact be the largest commercial district in Hong Kong at around 25 to 26 million square feet.
Wow. Well, gentlemen, thank you again very much for your time, and thanks for a stimulating conversation. Again, I'm Ross O'Brien with the Economist Corporate Network in Hong Kong, and we've just wrapped up our regional cost outlook for 2014. Thanks for your time.
Thank you.
Thanks for watching.